Okay, so let's understand the solution. Okay, but to begin with, we will first start that how many types of accounts we do have in our accounting. Okay, first of all, assets, capital, liabilities, expenses, and revenue. Okay, so you can write it down also. It will be very important for you to summarize the rules which I'm going to write. Followed by that, so assets are recoverable amount. Like let's say suppose you are into business of selling video games or selling any type of goods or services to your customer. So let's say suppose your customer says that I will pay you off after a period of 30 days. Okay, so that amount will become recoverable after a certain period of 30 days. Okay, now such amount will be considered as assets. Such amount will be known as assets. Okay, recoverable amounts, cash, bank, like these. So let's make a distinction here. Okay, so capital is equity. What is equity? What is preference? Preference share, capital, S for sh- share, C for capital. Okay, you can write it in full form also. Equity share capital. Okay, so the capital refers to the amount which is raised internally within the organization or externally out of the organization to finance the business. Okay, to finance the core activities of the company. Let's say suppose we are willing to start our new business, but suppose we are short of funds as of now. So what we will do, we will raise funds from outside of the company, like from the investors who are willing to invest in the new companies. Okay, so that will be considered as capital. However, you can also understand from this that a capital is a liability, because let's say suppose if you have investors and they are investing in your firm, it is very obvious that they are likely to liquidate their investment after a certain period of time, like let's suppose after 20 to 30 years of time. Okay, but as of now, understand this is a capital, equity, preference share capital. Okay, liabilities are payable amounts, short term debt, short term or long term debt. Payable amounts are, these are the amounts which are payable after certain period of time, like suppose you have a food manufacturing company. Okay, so to process the saleable product, okay, you have to purchase raw material from somewhere else. So if you have purchased raw material from somewhere else, then you have to pay to them also, your suppliers also. Okay, so it will be, so whenever the amount becomes payable after you have availed the benefits of the supplies, that amount will be considered as liabilities. Short term debt and long term debt, as you will be very familiar with this term. Like let's say suppose you take loan from banks to purchase the house, purchase different types of property, or purchase the furniture, vehicles, cars, and etc. These type of short and long term debt will be classified under liabilities. Okay, What are expenses? Okay, expenses everyone I guess know. Okay, so these are amounts incurred for business. Only business expenses will be considered as expenses, not of personal expenses. Okay, if let's say suppose a businessman is also considering the expense of marriage of his own in the business, it will not be considered. It will never be the case. Okay, expenses, revenue like sales from goods and services. So these are five type of accounts we will have throughout the accounting. Throughout the accounting. When I say accounting, it means throughout the accounting across the different countries. Okay. Now let's come to the basic accounting rule. First of all, you can also write it down. These are actually diamond rules of accounting. However, only a part of it I'm going to write it here now for our main solution. Okay, diamond rules of accounting. Increase in, okay, I will write the full the all the rules. Okay, first rule is this: increase in asset and expenses will always be debit. What are debit? How are they debited? In what terms they are debited? We will explain later when we will face much detailed problem about this. Okay, decrease in asset expenses are always credit. These are the diamond rules of accounting. However, if you try to find the science behind this, there will be no there will be no possible or logical reason behind this, that why these are credited instead of being debited. There will be no such grounds on which you can raise questions about that. Okay, these are the traditional rules, and we have to follow this at all levels. Okay, increase in revenue, capital. Okay, revenue, capital, and liabilities are always credit, are always credit. Whereas decrease in revenue, capital, liabilities are always debit. Please write these diamond rules. These will be very, very important for you to summarize at the time or before your exams. Okay. So followed by that, we have understood this. Now let's come to our basic solution. What it says: which of the following accounts will be increased after a debit? Okay. So we have seen only asset and expenses. If there is an increase in asset and expenses, there will be a debit. So first of all, we have to identify that out of the four items given in the question, which is the asset. So except the three choices we have only supplies as asset. Supplies are, you can also note it down. This refers to the inventory which we have purchased from our suppliers to produce saleable product. And when I say saleable product, it means the product in which we are mainly dealing. Okay. Now, so the correct choice. So this will be considered as assets. Why that so? Because we we have these supplies as part of our inventory. So by processing this, we will produce our finished goods that will be sold to our customers. Okay. You can also take an alternative name inventory as an alternative to name supplies. So the correct choice for problem 29 is C. Okay. So these are the five type of accounts which you have to remember, and although you will get a hang of it when you will practice the detailed problem, these are the diamond rules. Like you have to remember this. Okay. And you have to revise before your exams and during the exam if you get time to do this. Okay. Followed by that, we have derived our solution for problem 29, which is C. Thank you.